Ernst Young.
Ernst Young is a multinational professional services firm headquartered in London, United Kingdom. It was the third largest professional services firm in the world by aggregated revenue in 2012 and is one of the Big Four accounting firms. The organization operates as a network of member firms which are separate legal entities in individual countries. It has 175,000 employees and more than 700 offices in over 150 countries. It provides assurance, including financial audit, tax, consulting and advisory services to companies. The firm dates back to 1849 with the founding of Harding and Pullen in England. The current firm was formed by a merger of Ernst & Whinney and Arthur Young & Company in 1989. It was known as Ernst & Young until 2013, when it underwent a rebranding to EY. The acronym EY was already an informal name for the firm prior to its official adoption.
History. Early history.
EY is the result of a series of mergers of ancestor organizations. The oldest originating partnership was founded in 1849 in England as Harding and Pullen. In that year the firm was joined by Frederick Whinney. He was made a partner in 1859 and with his sons in the business it was renamed Whinney Smith and Whinney in 1894. In 1903, the firm of Ernst & Ernst was established in Cleveland by Alwyn C. Ernst and his brother Theodore, and in 1906, Arthur Young & Company was set up by the Scotsman Arthur Young in Chicago. As early as 1924, these American firms allied with prominent British firms, Young with Broads Patterson & Company and Ernst with Whinney Smith & Whinney. In the year 1979, this led to the formation of Anglo-American Ernst & Whinney, creating the fourth largest accountancy firm in the world. Also in 1979, the European offices of Arthur Young merged with several large local European firms, which became member firms of Arthur Young International.
Mergers.
In 1989, the number 4 firm Ernst & Whinney merged with a then number 5, Arthur Young, on a global basis to create Ernst & Young. In October 1997, EY announced plans to merge its global practices with KPMG to create the largest professional services organization in the world, coming on the heels of another merger plan announced in September 1997 by PricewaterhouseCoopers and Lybrand. The merger plans were abandoned in February 1998 due to client opposition, antitrust issues, cost problems and difficulty of merging the two diverse companies in cultures. EY had built up its consultancy arm heavily during the 1980s and 1990s. The U.S. Securities and Exchange Commission and members of the investment community began to raise concerns about potential conflicts of interest between the consulting and auditing work amongst the Big Five, and in May 2000, EY was the first of the firms to formally and fully separate its consulting practices via a sale to the French IT services company Capgemini for $11 billion, largely in stock, creating the new company of Capgemini Ernst & Young, which was later renamed Capgemini.
Recent history.
In 2002, EY took over many of the ex-Arthur Andersen practices around the world, although not those in the UK, China or the Netherlands. In 2006, EY became the only Big Four to have two member firms in the United States with the inclusion of Mitchell & Titus, LLP, the largest minority-owned accounting firm in the United States. In 2010, EY acquired Turco, the Brazilian member firm of Grant Thornton. In 2013, EY agreed to pay federal prosecutors $123 million to settle criminal tax avoidance charges stemming from $2 billion in unpaid taxes from about 200 wealthy individuals advised by 4 Ernst & Young's senior partners between 1999 and 2004. In 2013, EY changed its brand name from Ernst & Young to EY and to Building a Better Working World. On July 1, 2013, Mark A. Weinberger became chairman and CEO, succeeding Jim Turley, who had retired.
Global structure.
EY is the most globally managed of the Big Four firms. EY Global sets global standards and oversees global policy and consistency of service, with client work being performed by its member firms. Each EY member country is organized as part of one of 4 areas. This is different from other professional services networks which are more centrally managed. The 4 areas are EMEIA, Europe, Middle East, India and Africa, Americas, Asia Pacific, Japan. Each area has an identical business structure and one management team that is led by an area managing partner who is part of the global executive board. The aim of this structure is to effectively cater for an increasingly global clientele, who have multinational interests.
Services.
EY has 4 main service lines and share of revenues in 2011. Assurance services, 46% comprises financial audit, core assurance, financial accounting advisory services, fraud investigation and dispute services, and climate change and sustainability services. Tax services, 26% includes transfer pricing, international tax services, business tax compliance, human capital, customs, indirect tax, tax accounting and risk advisory services, transaction tax, advisory services, 19% consisting of 4 sub-service lines, actuarial, IT risk and assurance, risk, and performance improvement, transaction advisory services, TAS, 9% deals with companies' capital agenda, preserving, optimizing, investing and raising capital.
Staff.
EY was ranked number 1 in the Forbes magazine's The Best Accounting Firms to Work For in 2012, claiming that EY treats its employees better than other large firms. It was ranked 57 overall. The firm was ranked number 1 in Businessweek's annual list of best places to launch a career for 2008. The firm was ranked number 44 in the Fortune list of 100 best companies to work for, and the highest among the Big Four, for 2009. EY was ranked 4th in Universum's America's Ideal Employers list 2011 and 3rd in its Global Top Employers list. The firm was number 34 in Computer World's 100 Best Places to Work For in IT for 2009. The firm was also placed among the top 50 places in the Where Women Want to Work Awards for 2007. The firm was named as one of the 10 best companies for working mothers by Working Mothers magazine in 2012 for the 7th straight year. In April 2009, Reuters reported that EY launched an initiative encouraging its staff in China to take 40 days of low-pay leave between July 2009 and June 2010. Those who participate get 20% of regular salary plus benefits of full-time employee. It applies to employees in Hong Kong, Macau and mainland China where the firm employs 8,500 in total. In early 2012, it was reported that EY has 10,000 staff in mainland China and Hong Kong, which has quadrupled in a decade. It has about 11,200 staff in the UK. In 2012, the firm was ranked number 1 in the Stonewall Top 100 Workplace Equality Index, a list of Britain's top 100 gay-friendly employers. In 2013, the firm was ranked number 6 in the same Workplace Equality Index. In the year 2013, EY earned 100% rating on the Human Rights Campaign Corporate Equality Index. In the year 2013, EY was named one of Diversity Inc. magazine's top 50 companies for diversity. In the year 2013, EY was ranked 4th in Universum Top 100 Ideal Employer.
Criticisms. Equitable Life 2004.
In April 2004, Equitable Life, a UK life assurance company, sued EY after nearly collapsing but abandoned the case in September 2005. EY described the case as a scandalous waste of time, money and resources for all concerned.
Bally Total Fitness 2008.
Following allegations by the Securities and Exchange Commission that EY had committed accounting fraud in its work auditing the books of Bally Total Fitness, EY reached 2 settlements in 2008, including a fine of $8.5 million.
Anglo-Irish Bank 2009.
In 2009, in the Anglo-Irish Bank hidden loans controversy, EY was criticised by politicians and the shareholders of Anglo-Irish Bank for failing to detect large loans to Sean Fitzpatrick, its chairman, during its audits. The Irish government had to subsequently take full ownership of the bank at a cost of €28 billion. The Irish Chartered Accountants Regulatory Board appointed John Purcell to investigate. EY said it fundamentally disagrees with the decision to initiate a formal disciplinary process, and that there has been no adverse finding made against EY in respect of the audit of Anglo-Irish Bank.
Sons of Gwalia 2009.
In 2009, EY, the former auditors of Sons of Gwalia, agreed to a $125 million settlement over their role in the gold miners' collapse in 2004. Ferrier Hodgson, the company's administrator, had claimed EY was negligent over the accounting of gold and dollar hedging contracts. However, EY said that the proposed settlement was not an admission of any liability.
Akai Holdings 2009, and Mulang Global iCare 2010.
In 2009, EY agreed to pay $200 million out of court to settle a negligence claim by the liquidators of Akai Holdings. It was alleged that EY falsified dozens of documents to cover up the theft of over $800 million by Akai's chairman, James Ting. In some cases documents had been painted over with correcting fluid and then written over by hand. In a separate lawsuit, a former EY partner, Christopher Ho, made a substantial payment to Akai creditors in his role as chairman of the company that had bought Akai just before it went bust in 2000. Police raided the Hong Kong office and arrested an EY partner who had been an audit manager on the Akai account from December 1997, although audit documents had been doctored dating back to 1994. The EY partner for the Akai account between 1991 and 1999, David Sun Tak Kai, faced no charges and went on to become co-managing partner for EY China. A few months later EY settled a similar claim of up to 300 million Hong Kong dollars from the liquidators of Mulang Global iCare, an audit client of the Hong Kong affiliate between 2002 and 2004. The liquidators described the Mulang accounts as a morass of dodginess.
Lehman Brothers 2010.
The Valukas report issued in 2010 charged that Lehman Brothers engaged in a practice known as Repo 105 and that EY, Lehman's auditor, was aware of it. New York prosecutors announced in 2010 that they have sued the firm. EY said that its last audit of Lehman Brothers was for the fiscal year ending November 30, 2007 and that Lehman's financial statements were fairly presented in accordance with generally accepted accounting principles.
Standard Water 2013.
EY Hong Kong resigned from the audit of Standard Water when it emerged that although they had signed off the audit, it had been effectively outsourced to the affiliate in mainland China, who had received 99.98% of the fee. This was important because shareholders have less confidence in mainland auditors, and audit papers on the mainland are subject to state secrecy laws and can be withheld from outside regulators. EY's quality and risk management leader, Greater China, even testified in the court of first instance that he was not sure if there was any formal agreement covering the relationship between the two EY entities. The court case in 2013 came as U.S. regulators were taking an interest in similar cases of accounting fraud in mainland China.
Sponsorship.
EY's publicity activity includes its World Entrepreneur of the Year program, held in over 60 countries. EY UK also publicises itself by sponsoring exhibitions of works by famous artists, such as Cézanne, Picasso, Bonnard, Monet, Rodin and Renoir. The most recent of these was Maharaja, the Splendour of India's Royal Courts at the Victoria and Albert Museum. In addition, EY publicises itself by sponsoring the educational children's show Cyberchess on PBS Kids under the PBS Kids Geo television brand, in an effort to improve mathematics literacy in children. EY in the UK sponsors the Item Club. EY in the UK has set up the National Equality Standard, an initiative developed for business which sets clear equality, diversity and inclusion (EDI) criteria against which companies are assessed. The National Equality Standard (NES) is currently the only industry-recognized national standard for EDI in the UK.
Sports sponsorship.
On September 8, 2011, Rio 2016 made the announcement that EY will be an official sponsor of the XXXI Olympic Summer Games to be held in Brazil, as the exclusive provider of professional services, consulting and auditing, for Rio 2016 Organizing Committee. EY also has a long-standing relationship with the 2011 Tour de France winner Cadel Evans.
Notable current and former employees. Business.
Arthur Blank, co-founder of Home Depot, owner of the Atlanta Falcons. Jim Balsillie, former co-CEO of Research in Motion, 1992 to 2012. Liz Bingham, president of R3, the industry body for restructuring professionals. Andrew Gould, chairman and former CEO of Schlumberger, 2003 to 2011. Ed Grier, dean of VCU's School of Business, former president of the Disneyland Resort, 2009-present. Chris Kubasik, COO of Lockheed Martin, 2001 to 2012. Sean Wise, venture capital commentator. Patricia A. Wuertz, CEO of Archer Daniels Midland, 2006-present. Michael T. Strianese, CEO of L3 Communications, 2006-present. Karan Bilmoria, Baron Bilmoria, founder of Cobra Beer.
Politics and public service.
Jan-Peter Balkenende, Prime Minister of the Netherlands, 2002 to 2010. John B. T. Campbell III, Member of the U.S. House of Representatives, 2005-present. John Choi, Mayor of Edison, New Jersey, 2006-present. Christopher Chope, Member of the British Parliament, 1983-92. 1997-present. Sheila Fraser, former Auditor General of Canada, 2001 to 2011. Cheryl Gillen, Member of the British Parliament, 1992-present. Edward H. Ntalami, CEO at his Kenyan Capital Markets Authority, 2002-present. John Howell, Member of the British Parliament, 2008-present. Hugo Schiltz, Belgian Senator, 1992 to 1995. Jeff McQuaiters, Member of the Virginia State Senate, 2010-present. Tin Pui Ling, Member of Parliament for Marine Parade GRC, Singapore, 2011-present.
Other.
Kimberly Clarice Aiken, Miss America 1994. Genevieve Brame, author. Jeff Moss, born c. 1975, founder of the DEF CON and Black Hat Technology Conferences and member of the Homeland Security Advisory Council. Joyce Carol Vincent, employee in London, notable for the circumstances of her